welcome back to the Ultimate Trader Workshop. In this video, we're going to be reviewing something that I introduced in our last Euro Dollar Macro 222 Bearish Gartley video, and that is the line of least resistance. So we're going to dig a little bit more into that. We also get to follow up on another macro trade, what we're looking at here, that's pound Audi. Several weeks ago, I introduced you guys to what was happening on pound Audi, and on the monthly time frame, there was another pattern that had been completed, an advanced pattern. The A to B is equal to CD pattern, again on the monthly chart. So I'll start there, then I'll come in, and then we'll do the lesson on line of least resistance, because that's going to be very important to understand that concept and those principles as we go forward in turning points. So jumping back out to the monthly chart, just for a quick review, what we're talking about was this A to B is equal to CD pattern that had completed up here. Now, typically you can see a retest into that area, or maybe price action, push up a lot with a lot more strength, but it didn't. It started rolling over. So it looks like we are in the distribution phase, meaning the selling portion, holders or traders selling their British pounds. That's what looks like it's happening. Typically is what you would see once the pattern is completed. Something, especially if something as powerful as A to B is equal to CD, which is basically a harmonic pattern. It's the backbone and it's the principle that the Gartley pattern is built off of. You would basically be trading bearish in the bearish direction, counter trend style, after exhaustion of the buyers, and then you start seeing there's conviction to the downside or distribution. Okay, and then you start looking at your targets based off of that. You can do it off the entire A to D leg or just the C to D leg. They both basically line up in the same place. Now that we've talked about that, let's talk about how we got to where we are now, because that's very important. So I'm going to come a little bit closer out of the month to the week, and then again, we did this video a couple of weeks ago, several weeks ago at this point. So here's our feel of the pattern. We come down, the market starts trading sidewards. You don't have any confirmation that this rollover is indeed going to roll over, because it still is sort of consolidating, but it's not accumulating to the upside. It is weakening. So if I were to even come and bring on RSI, you would see weakening in it, or a slowing in the buying. Okay, so RSI is a momentum indicator. It measures the speed of transactions. So getting through those things real quick, how we got involved is with me waiting, okay, with me using my psychology and waiting and knowing that I didn't want to get involved way back here in April, especially that was tariff time, the first or second week in April, where you were going to, start seeing just a whole lot of just jigsaw, whipsaw, madness, uncertainty until we got something certain. What we did get, okay, was pretty good, and it kind of gave us the signal that it's time to prepare to deal with this thing. Another long-term trade, just like the Euro Dollar Bear Gartley, is going to be several months, maybe even several years riding that thing down. Same thing here with the A to B is equal to CD pattern. These things are basically mirroring each other, both macro bearish counter trend opportunities on large time frames. So how we got involved, of course, drum roll, was 3-bar reversal, or trade 3BR. So that was bullish engulfing candle, followed by doji, followed by trigger and entry, okay, taking out the doji, closing below the doji. So that was confirmation that it was going to be time to go on this. The good thing about pound Audi is it was layered. We got back-to-back levels of confirmation. Right after the 3-bar reversal, we got 3-bar continuation, okay? And the 3-bar continuation was engulfing candle. I'm trying to keep us from having to mark up too much. Was engulfing candle, followed by doji, followed by trigger and entry, taking out the doji. So that gave me a chance to explain 3-bar continuation versus 3-bar reversal, and we do have both of those classes somewhere. I think they're either in Turning Point or they might be in the Harmonic Trading Academy playlist, but if you want to know more about these two powerful opportunities, you can find them both there. Okay, The thing about it is, in this opportunity, okay, confirmation down here after the 3 bar continuation, that was the second entry. A lot of those profits wiped away because there was tariff turmoil. Da-da, go figure. Tariff turmoil comes and wipes the stuff away, but it's really not a big deal because, of course, stops above the 3 bar reversal. But back off to the races after recovering 2 weeks ago from the tariff. So you get your conviction back, and then that's when the magic really happened. That's when you have a break and close taking out that structure. Okay, so this is where the line of least resistance begins. This should start the true process of distribution, riding down to at least that 618 retracement of the C to D leg, or maybe even the X to D leg, okay, or A to D leg in this case. So also, there's one more thing. When we finally come back to our monthly chart, this is where it gets good. You got 2 bearish months. The September month, even though it's got the China tariff represented in it, it still wasn't enough to turn it to bullish. It was still a bearish candle, and it still closed. It still closed beyond September, giving it a lower close. This is actually the real signal that we were waiting on. The other stuff was just preliminary, setting up the opportunity and having to wait several weeks. But the October candle close beyond September, bing, 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 that was the one. So at this point, now we will be riding this momentum. As long as nothing crazy happens, anything can happen. Okay, all we can do is understand what we're looking at and put ourselves in the best position is to continue to probe in position. So we already have the first entry from the 3 bar reversal, the second position from the 3 bar continuation, and then the third position coming in with the November close. So they'll already have 3 positions. We won't enter the next position until Monday when the market opens. Can't enter a position when the market is closed. And then continue to monitor and trail each stop as we go, because each position will be its own trade going forward. As far as the line of least resistance, that's a principle coined by Jesse Livermore. He's one of those. He comes out of that great category, your Wyckoff people, Carney category, Gartley. He comes from that crop, okay? And Wyckoff has a whole lot of theories as it pertains to approach the market. I strongly suggest that you start studying these names as they come out. It's only going to help you really understand the market from a historical standpoint, where all our principles come from. We're not making this stuff up today. This stuff was already invented by the greats and the pioneers of the market. So we're going to go in a phase where we can really start what he called, Livermore called, riding the line of least resistance. Okay, and that means that as you continue in this case to create lower low lower close, or use the lower low lower close, or L3C principle, that allows you to continue to pyramid in, selling on more positions until you get to target, instead of having one position or over leveraging on one position, going into a huge drawdown, getting margin calls and things of that sort, or completely risking the account with the uncertainty because you don't know what's going to happen. What allows you to do is protect the capital. It allows you to be better manager. It's better trade management to continue to profit as the trade moves in your direction until you finally get to target. Also, it will allow you to try to have a better understanding of where the actual bottom in this case may be, so that you don't pull your profits too early. Okay. Also, it gets rid of old theories, such as maybe you got a target here at the 382 retracement up here. Old theories such as taking half of your position and being scared and putting it in your pocket because you think the boogeyman, the market, is going to come take it away from you. And then just letting the last little half come down to the 618 and then calling it a day. And that's why you see with me, I even have 7086 on here, because we don't know how far this thing is going to go. We just need to come in, analyze, and be prepared to take action depending on what's happening in the market at that time, and stop trying to trade from a point of prediction and trade from a point of probability. Okay, so from prediction, which is wrong, which is what we were taught, to probability. What looks probable here? Statistically, what can we look for in terms of the patterns that are in front of us? Where's the crowd going? What does the volume look like? Where's the conviction? Where's the structure? What's been created? That even though that sounds like prediction, it's really going to be based off the probability in terms of where the market is going. So wanted to introduce or speak more on line of least resistance, so you can start to look at that and incorporate it, more the better our vocabulary and the better our understanding and our terminology is, also helps with our trade execution and trade management and our trade psychology. So if you want to know more about the A to B is equal to CD pattern, we do have that over in the Harmonic Trading Academy playlist. Probably one of the best trainings that you can find out there. The 3-bar reversals there, as well as 3-bar continuation, as well as everything else that we talked about in this video. So I should have asked you to hit the like before I even got started. I keep forgetting to do that, but please hit the like button. Pretty sure the entire trading community could benefit from a video like this. Okay, subscribe to the channel if you're not subscribed, and hit the bell icon so you can be notified when obviously the most and the best videos in the trading educational space come out. Free of charge, no paywalls, no discords, no websites, no Lamborghinis, no we're trading on a boat and we're going to get rich tomorrow. None of that stuff. Raw, uncut education. You know how we do it here at the Harmonic Trading Club. You guys be good. Take care of yourself in the market, and I will see you on the next video.